Hello, everyone. Welcome back to the world's best investing podcast. Today, I've been studying a company which I think has vast asymmetric potential. One thing Palantir, AMD, Spotify, and other companies that I've invested in over the past few years had in common a few years ago is that they were vastly asymmetric opportunities. They were wonderful companies, extraordinary, world-class, trading at rather pessimistic valuations. So what I'm going to show you today, I think, has a similar component to it. Of course, there's no guarantee of success. This is never financial advice, just for entertainment and educational purposes. But I think that this company is quite extraordinary. So look at the graph on the screen now. You will see the orange line, which is HelloFresh's free cash flow per share. As we know, stock prices track free cash flow per share, even if investors have emotional reactions like we're seeing over the past few weeks. And this metric is ticking up, specifically over the past year. Now, monthly, quarterly metrics are always full of noise, so they're not really worth looking at unless you want to convince yourself out of a position, as I think we've seen some HIMS investors do over the past few months. But here, free cash flow per share is going up because they're successfully implementing some efficiency measures, which they sought out to implement around a year ago. What's interesting is that these guys operate, in my opinion, one of the most complex supply chains on earth. This is the equivalent to you going and buying food from the supermarket and then cooking it at home. This is not Uber Eats. This is literally food sent to you on a regular basis, either via meal kits or ready to eat. So those are the two verticals. And so to do that, these guys need to have a very, very exhaustive control over their supply chain because they're moving perishables around. So getting perishables in a great state, either cooked or semi-cooked or whatever, to millions of individuals worldwide, it's obviously a very complex challenge. So much so that no one else really has such a vertically integrated infrastructure at scale. There's really no one even close behind them. So what happens is that as these guys are printing more cash now, they are now in a position to reinvest that into widening the value to price ratio. So you can see in the graph on the screen how actually revenue has been plateauing since 2022, roughly. And that's because this service only really makes sense to those that value time over money. Otherwise, if you just want to save money, you go to the supermarket and cook it yourself, which is what the vast majority of the population does now. And so what's extraordinary is that even though revenue has been plateauing, they've been driving cash flow production up now, and now they're reinvesting that into widening the value to price ratio. So basically improving the service. And I'm quite impressed with the management team. I've been studying this company for, I think, 2 years now or something. The odds are drastically against them. This is a semi-impossible challenge because actually the end game of this business is to send you cooked food at a higher quality, more convenient, and for cheaper than you going to the supermarket, buying the food and cooking it yourself. So it's a gargantuan task, but actually I think these guys are doing very well. And during the Q3 2025 earnings call, management kept giving examples of how now they're reinvesting the cash they are producing into improving the service. And most importantly, they said that they begin to see improvement in their internal satisfaction metrics. I'll tell you two reasons why I actually assign quite a bit of weight to that remark. It actually came from CEO Dominic Richter, who I think is an extraordinary guy, like really, really smart. Even if they fail, what they've done until now is pretty extraordinary. But basically, number one reason is I've seen these guys execute and they say what they said they were going to do. Two, in order for these guys to print cash at all, they need to have this extraordinary control over what optimizes lifetime value. So that is actually the key ingredient of other companies that I'm very bullish on, like Spotify and Duolingo. These companies are in essence just A/B testing machines, and they know exactly what to drive forward in order to maximize lifetime value. And the variable that most impacts lifetime value positively changes over time. So it's a complex, dynamic thing to do. It's more so here because, as I was saying, the value proposal in this business is not clear to everyone. And it's at the moment, it's just people that basically value time over money. As I was saying, it's not for everyone. The majority of people are going to prefer going to the supermarket or even going to a restaurant or whatever. And on top of that, even the customers that the company does have today, their life changes over time. So maybe sometimes they are shorter on time. Other times, maybe they have a lot of time. So their perception of the value proposal of the business changes. And so it's literally impossible to move around all those perishables in the supply chain with such unpredictability of the end customer because the proposal is just not so firm. So if you're Uber or something, you know that generally people are going to want to push a button and get a ride, and that's going to be a relative constant in their lives. Here, it's not the case, and cars are not perishable, but food is. So it's just an extraordinary complexity. However, if you look at the graph on the screen now, you will see that HelloFresh's cash from operations has been squarely positive since the year 2020. The value proposal became suddenly very attractive to a lot of people during 2020 because they couldn't leave the house. But then ever since, obviously that has unwinded. And these guys, they haven't really widened the value to price ratio sufficiently for that to change. So basically what they've done is just operate in this extremely efficient way, which somewhat abstracts away the weak, perhaps unpredictable nature of their demand side. All of this in relative terms, because the company, I think, is fairly likely to have a relatively strong, loyal base. But even then, the fact that they've been producing cash, and it has trended down certainly since 2020, but now it's ticking back up. You could say it's relatively stable since between the year 2021 and 2022. So what I infer is that these guys have a tremendous ability they have a lifetime value machine, which is what Spotify has. And so now, as they turn their attention towards reinvesting cash into widening the value to price, the value to price ratio, I think that the odds of them unlocking a growing volume of pockets in the market whereby people come to really like the value proposal is high. And then they don't have to substitute supermarkets right away. Indeed, it might not even happen, right? But that is the end goal of the business. And so these qualitative properties, which this organization has, which has enabled them to print this much cash, even with this very complicated backdrop since the year 2020, makes me think it's likely that as they direct their attention towards improving the quality of the services and the products they basically deliver, I think it's quite likely they widen the value to price ratio enough for this company to resume growth. And then over the long term, if that becomes a thing that they can do reliably, which as I was saying, I think would be reasonable to think given their track record thus far, I think they can make their way towards becoming competitive for a broader part of the population. So here in the written form of the update, I share some quotes by the CEO, but he's basically saying how in Q3 2025, they invested record levels into both the meal kit and the RTE operation, and they're seeing satisfaction go up in the internal metrics. So I'm not sold here yet, but this is trading at 0.16 times sales. And to me, this looks like actually quite an extraordinary operation led by a very bright founder. Long-term, massive potential if they do finally come to get into that rhythm of widening the value to price ratio, as we see other wonderful companies do, like Duolingo and Spotify, which are obviously further ahead in their journey. But I quite like it. A growth company or a company of this sort with such a large TAM and stuff, sometimes they trade, at 4 times sales. If they're truly extraordinary, they may trade at 15, 30 times sales. But then obviously 0.16 times sales. For, say, this company were to eventually trade at just 4, that would be a 25x upside. And then over the long term, more if they do execute successfully. So I really like the risk reward here. I'm not making a change to my portfolio just yet or anything, but I continue to study this company. And I think it's just very interesting because people are going to have to eat probably forever, or at least I think people are going to want to. And I think that these guys have no one else behind them. Basically, there's no other company with this kind of infrastructure. People not only have to eat, but also their pets. They do have a vertical for that. So food is a huge business. It hasn't changed in a long time. And here I think it could change. Personally, I don't think I would be a customer of this just yet, but it's a little bit like with the Hims and peptides. If you give me very high quality organic food with no additives, not cooked with seed oils, and you can sort of guarantee all of that such that it's actually higher quality than I can get at the supermarket here next to my house, and it saves me time and it's cheaper, there's absolutely zero reasons for me to not be a customer and also be invested in this business. So these guys are trending in that direction and I like it. So I'm going to continue tracking this company. As I said, I don't have a position. I don't plan on starting one soon, but I really like the management team. I like the track record. It has that sort of asymmetric feel to it where cash from operations is positive. And now I see a potential catalyst in terms of non-linear fundamental improvement going into the next year, 2, 3, or 4. So I like it. Anyways, guys, thank you very much for joining me. As always, if you enjoyed this update, could you please share this video with one friend whom you think will enjoy it? These updates and deep dives are for free, and so the only way this grows is with your help. So thank you very much in advance. Take care, and until next time.